Howdy out there, folks. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, February 23rd, 2022. Starting with markets, we have stocks up this morning, commodities mixed, crypto up, dollar down, global bond yields up. Big movers this morning. We got Bitcoin up around 2.5%, Ethereum up a little bit over 4%. Shifting gears to the macro front, the latest batch of leading survey data from across the global economy were generally confirming of our post Omicron bounce view. That said, we continue to accumulate evidence of cracks in the U.S. consumer story, which may limit the duration and/or upside in any such recovery. Moreover, we continue to see disappointing U.S. consumption growth as a key downside risk for the global economy in 2022. So, starting with the February preliminary PMI data, on the countries that were improving. So, we saw Australia manufacturing tick up, Australia services, France manufacturing, France services, Germany services, Eurozone services, UK services, US manufacturing, and US services all improve. Unchanged UK manufacturing, and then declining. Japan is still stuck in the mud here. Japan manufacturing, Japan services, Germany manufacturing, and Eurozone manufacturing. So generally improving on balance. Shifting gears to the February to March business confidence readings. On the improving side of the equation, Germany's EFO headline, their EFO current assessment, their EFO expectations, the Bank of Korea Manufacturing Business Survey, and the Bank of Korea Manufacturing Business Survey, as well as the France INSEE headline index. Nothing unchanged. And then we saw the Richmond Fed number tick down, the manufacturing survey tick down. And then lastly, with respect to February consumer confidence ratings, on the improvement front, we have the U.S. Conference Board's present situation index, nothing unchanged, at least in terms of this batch of data. And then lastly, declining month over month, we saw the Bank of Korea headline index, the U.S. Conference Board headline index, Conference Board expectations index out of the U.S., the Conference Board income differential. And taking it to the chart here, this is one of the most important statistics we've gotten in recent months, which is this Conference Board labor differential, this blue line in this chart here. It's showing the spread between this index level between the survey respondents say jobs are plentiful 6 months hence relative to the survey respondents or the index level of the survey that jobs are not so plentiful. And so what we're seeing here, we're starting to crest off the cycle peak, tick down to 42 in the most recent month. And as you can see in this chart, it's pretty the peaks and declines in this blue line tend to be correlated with drawdowns, big drawdowns in the S&P. There have been 9 cycle peaks since the early 1960s in this indicator. And what we've seen is a median decline of the S&P 500 of minus 36%, median decline of minus 36%. So just want to keep reminding folks that in terms of the business cycle risk that we see over the medium term, that this is something that's not quite yet fully understood and obviously not priced in asset markets. Otherwise, we would be dealing with the 10% correction as what we see currently. So keep that on your radars as we progress throughout the year. We'll obviously continue to update you on this program and obviously in our published research at 42macro.com. Shifting gears to the probable range setups. Overbought signal in nat gas, Aussie dollar, oversold signal, nothing oversold. S&P 500 that is still neutral VAMs with minus 1.4% of downside in its probable range versus 6.4% of upside. WTI still neutral as well from the perspective of our volatility adjusted momentum signal, 7% of downside in its probable range versus 8% of upside. Bloomberg Dollar Index still bullish VAMs, minus 0.2% of downside versus 1.4% of upside. 10-year treasury yield still bullish VAMs, minus 10 basis points of downside versus 23 basis points of upside. And Bitcoin bearish VAM still minus 8% of downside versus 11% of upside. Ethereum bearish VAM still minus 14% of downside versus 12% of upside. And then lastly, gold still neutral VAMs with minus 4.3% of downside with 0.4% of upside in its probable range. So be aware of that on gold to the extent you are inclined to chase bullion. With that, Darius Dale presenting our macro minute for Wednesday, February 23rd, 2022. Best of luck out there today.